Hello and welcome to the podcast of urbanimpactjournal.com. I recently had a chance to speak with an expert in the field of venture capital. His name is Mr. Lee Tabas. He is the president of Tabas Funding Ltd, and he's an expert in community banking and entrepreneurship. For 30 years, Mr. Tabas grew from bank trainee to bank president, and under his leadership, the Royal Bank of Pennsylvania, which was acquired by Bryn Mawr Trust in 2017, grew from $20 million to assets of over $500 million. He has served as trusted advisor to bankers, and he has invested in several small businesses through his company, Tabas Funding Ltd. Here's Mr. Tabas.
My father was an entrepreneur, and he was in the steel business, restaurant business, and my grandfather was in the scrap business before that, and I worked. My first jobs were busboy, waiter, cook, worked in the coat room at a hotel, and then later on we were involved in the restaurant business, and I was in the banking business, and spent most of my career in the banking business, ending as president of a community bank, and then I retired in 2000, and I was teaching at Philadelphia University, and in addition to that, I started a company to provide funding for entrepreneurs who want to expand or acquire businesses. We try to find businesses that are in business. They have to be in business for us to be involved with them, and that have a potential for sales, in rapid growth in sales, and then we back them.
So, what types of businesses are we talking about? Mostly restaurants or larger businesses? So, what level?
Well, generally, in terms of sales, what would be appropriate would be businesses that have at least a few $100,000 in annual sales, up to maybe $20 million in annual sales. We're open to different types of businesses, although probably highly technical businesses might not be appropriate. We haven't done anything with software, for example.
Right.
But we have done some internet-related businesses.
So, how many businesses do you have in your portfolio right now?
I would say right now there's about a dozen. So
okay.
It's not like we are doing a lot of these transactions. Boy, if we do 10 a year, it's probably a lot. But it's a big number. At least for me, the size of the investment is $100,000 up to around $750,000.
Okay, so we're talking about, for a small community-based business, I guess that's a large investment. So, what is your process for selecting a business aside from the basics that you just mentioned? Let's say someone approaches you from a local business, or is it larger businesses, usually chains, or is it based on your surrounding areas? Is it necessary for you to have proximity to the business? And aside from that, what's your process of examining a business and getting involved with it?
Yes, proximity is important. So for logistical reasons, Tabas Funding limits its clients to Pennsylvania, New Jersey, and Delaware.
Yeah.
Has to be within a few hours of where we are, because I'm a tire kicker. I want to go and see the business. I want to go meet the entrepreneur. And we get our leads from, I guess, a couple of primary sources. One being click and pay on the internet, which is that we pay the search engines. We agree to pay them so much every time someone types in business funding in Philadelphia or something like that. And then depending on how much we are paying, we either get that lead or we don't. We have a list of friends and business acquaintances that we send a newsletter to a couple of times a year, and some leads come out of that. And then I think brokers are probably another source of leads. There are loan brokers and business brokers.
So usually the deals that you develop are loans, or are they based on equity? How exactly do you structure your deals generally?
Well, what Tabas Funding does is we do what I call a mezzanine loan, which is it's a loan, but it has an additional payment to which we agree so that we can get some additional interest. And the interest is typically between 10 and 15%, the basic interest. Some people might say, wow, that's a lot of interest, but also there's a lot of risk, and some of the things don't pay back. So we have a basic interest rate of between 10 and 15%. And then in addition to that, we agree on a formula, which is usually related to sales, where we can get some additional interest. If a business is not doing well, we would be happy to just get repaid. But
right.
Some businesses, some businesses don't succeed, and to make up for the ones that don't succeed, we have one that is doing well. Then we have to get a bit extra. So that's the general format of it.
But you do not become a partner in the business, or you do not.
No, we typically we have not taken any ownership interest, and that does appeal to people that don't want anybody. Most entrepreneurs, I find, are interested in the funding, but they really don't want anyone to tell them what to do, or they're not so much interested in the advice. We give them the advice anyway. I mean, I give them the advice. I've seen a lot of endings, both good and bad endings in my career in banking and after and before. And so I tell them what I think. They get that whether they want it or not. But most of the time, the entrepreneurs don't particularly want it.
I see. Usually, how long do these relationships last?
We're tend to be long haul. We tend to be repayment between 3 to 5 years. That would be a typical kind of thing. And I said that we do this click and pay thing on the internet. And what happened is that some number of years ago, there developed a type of business which is called merchant cash advance business. I'm not sure if you're familiar with that or not, but
no, I'm not.
Well, someone figured out that businesses that take credit cards are very likely to receive the money from the credit card, 100%.
Right.
And they came up with formulas where they would advance money based on the amount of credit card business that a business does. And this type of thing has proliferated to where there's hundreds of companies doing it. It's very expensive, and the repayment is very fast. It's almost like a payday loan for businesses. And
it's expensive for the entrepreneur, right?
it's very expensive for the entrepreneur, and very hard. Sometimes entrepreneurs get lucky, and they may be doing well enough, and they may be able to get, say, a bank loan to pay off. But a lot of times these things are just traps. Now, the reason I mention it is because they have repayment that's very fast, 3 months, 6 months, something like that. Well, we're not like that. We know that if entrepreneurs want to do something, first of all, they want to acquire something. It's going to take them a while to figure out how things work, or start something, figure out how things work. So we try to match the repayment with the cash flow. Sometimes there's an interest-only period for a while, and then it starts to repay. It's kind of like a car loan or something like that, where then they would be paying an even amount monthly.
As far as your activities, you would not call yourself a venture capitalist, would you? How would you?
Well, it's a little bit. It's to some extent, it's a venture capital. Yes, to some extent, it is. I think.
Now, when we think of venture capital, we think of large tech startups in Silicon Valley and all that stuff. But you feel that venture capital has a role to play in building small businesses? And I mean by that you feel that venture capitalists could get enough of a return to invest in small businesses? And to what extent is that does that make sense in terms of risk?
Well, Tabas Funding has done very well, and I will say also that most of the money is my money. Yeah. Occasionally, if I have a larger transaction, I'll reach out to other people to be participants, some other participants. But so I'm actually using my own money, and I've done pretty well. What has happened, it's interesting, I've been saying for the last several years, I've been saying the opportunities were a lot better during the recession. But unfortunately, I guess we're going to find out again a lot quicker than I probably would have wanted. So anyway.
You mean after the COVID things?
Correct. Over? Yes. Right. That's correct. Yes.
Do you have any specific examples of a good deal that you've dealt with and a bad deal that you've had?
Well, let's see. Okay, yes, it's just a couple things popped into my mind. We provided some funding for a cosmetics manufacturer to move from the existing multi-story space where they were to a brand new, large single-story building. And they had gotten money from the bank. They had gotten money from the Economic Development Association, and they still were short of money. So one of the things we can do is to fill gaps. So we filled the gap and lent them additional money that they needed, and they were able to move into the new space and become more efficient, and the business grew and did very well for them, and also did well for us. And so that was a good example. And then a bad example was that we were asked to provide a credit line for people that seemed like they knew what they were doing. I think one was a lawyer, one was an accountant, and one was perhaps an engineer, something like that. And they wanted to take money and back kind of small real estate investor reseller people. And so what they thought is they thought they would put out the money, that the real estate people would, I guess, buy properties, put money into properties and sell them, and then repay. And it turned out that they weren't successful. They weren't successful, and I think that one of the reasons was that we were remote from the actual recipient of the money. We lent the money to this trio of the lawyer and the accountant and the engineer, and then they were lending it to other people.
Uh-huh.
And so anyway, so the things went bad for them. And then I remember investigating, well, maybe some of these properties that they invested in, maybe there's some value in them. Right. And I remember looking at one of them, which was a seashore property. It was in Atlantic City, as I recall, and it was the beach block. And I thought, well, can't be too bad. Mm-hmm. Beach block. And then I went and looked at it, and there was buildings that were fronting on the street, and then there was a break in the buildings, mm-hmm. and there was a narrow walkway in between two buildings. Walked in there, and there was a landlocked, I guess it was a house, landlocked house. The only thing you could see if you were in that house was the other buildings that were all around. And I thought, well, this is the problem. They bought something like this property, which is terrible. Who would want to have this property?
Theoretically, it's close to the beach.
Right. Yeah, it sounded, and maybe they never looked at it. I don't know, but it was terrible. So that's an example of a good one and a bad one.
So what happens when, as far as collecting, as far as banks are concerned, I guess banks can always ruin your credit. But what do you do in that case? Do you just sue them, or how does it work?
Well, most of the time, the collateral is really a secondary consideration in this type of lending. When the Tabas funding takes whatever's available, whatever's the best available, but a lot of times it's behind a bank or something like that, or sometimes it really is not of any real value. And that's just part of the territory. One thing that I did learn in my time in banking is that you really don't get repaid from collateral. Now I started getting some feedback, but anyway, you don't get repaid from collateral. I mean, maybe if you're lucky afterwards, the collateral was worth what you put into it, but really you get repaid from the cash flow, the ongoing cash flow of the business, and that's the most important thing, to try to back a business that has the potential for good cash flow.
So your deals involve a percentage of the sales, some kind of percentage of the gross the revenue?
Yes, that's correct. That's correct. Typically, they do have that. Sometimes we structure it a little differently, but that would be a typical part of it, feature.
Right. And I'm assuming the businesses that are interested, in most cases, are unable to get a loan from a regular bank. Is there a reason why they can't get?
Well, there's two things. One thing is either they can't get a loan from the bank, or the other thing is sometimes they even can get a loan, but they don't get enough.
I
So
see.
that's where, so we can help to fill a gap if they don't get enough. And then the
Yeah.
other thing is sometimes we can read between the lines better. For example, we provided funding to the head bartender to acquire a pub where he worked. And typically in the bar and restaurant business, people typically do not report all of their income. It's a notorious thing, and so the problem with that is that you get financial information, and the financial information says, "Hey, the bar lost money." Well, if they lost money, how did they manage to stay in business for all
Right.
those years? And so maybe we can interpret it better. We felt that, well, this guy's the head bartender. He knows what they're doing, and it turned out to be a pretty good bet.
So you mean that a small business, in many cases, it kind of presents itself as losing money somehow. There's a cooking off the expenses and whatnot just to save on taxes, and then, whereas in fact they are making money. Is that what you're saying?
That is correct. That is correct. And this is very widespread. It's interesting that no one from the government is willing to tackle this, but this is a very widespread thing. And
but then how do you as a lender make sure that the new guy is going to report everything, especially in bars? I mean, you were involved in the restaurant business, so you know that it's a cash business.
Well, we're not the IRS, so that's not the obligation of Tabas Funding, but
no, I know,
the
but
obligation of them is to take care of the conditions of the loan. So that's a different thing.
I see, yeah. But when part of your return is based on sales, when you're dealing with a cash business, how do you keep an eye on the entrepreneur, a small entrepreneur?
Well, that's a good point. I'm trying to think what we have the right to audit. I'm trying to think whether we ever did. I don't know that we ever did formally. I have questioned some of our borrowers from time to time about it. And I don't know, generally, we felt that we were being treated fairly. So
I see.
I guess that would be the answer.
So, just a couple of final questions. What's more rewarding? Is it banking? I know you were a president of the bank for many years, or this type of business, the lending business. Which one do you feel is more rewarding to you personally? But and not financially, but as far as you know.
Yes. Well, I got into it because it's really similar to the banking business.
Right.
I retired from the banking business, and of course, at first, yes, I missed the action. But I do like Tabas Funding in that I can mostly arrange my own schedule. And I've had some pretty good success with it. I think if I didn't have success, then I wouldn't be so happy about it. So and variety is nice too. Experiences different things. I have always enjoyed working with entrepreneurs, and so that is a common thing in the banking business. We were very hands-on in the banking business, and I believe that community banks can get to know their customers better. We knew our customers, and always like working with entrepreneurs. So it's very similar, I think.
Great. Well, I don't know if you have anything else to add, but this was great. I think the responses were wonderful, and it sounds very exciting what you're doing.
Well, it's going to. I think it'll be a new, exciting phase after this
Oh,
COVID thing. And
has
we'll
it?
have to.
How's this affecting your business now? Considering that small businesses have zero revenue now,
Well,
are you stopping the payment? What's the
w- well, I
deal?
think first of all, it's to be determined,
Uh,
and I've had at least one small business ask for deferral of payments, to which we agreed, and offered deferral of payments to some other ones. One of which at least turned it down. So I don't know, but we'll have to just see. We'll have to just see what happens. I think that there are so many people trying to interpret this new law that was passed, which I think is going to be difficult to make work promptly.
why?
Well, I know that in the 2008 recession,
Uh,
the Germans had a program where the government provided funding to businesses if they kept people on the payroll. And I sort of thought that part of this program that we have now was trying to do that, and which worked well for the Germans. I'm not sure whether loans are the right way to do it and why it is done as a loan. In other words, my understanding is that it's a loan that is forgiven if a business keeps their employees on the payroll.
Maybe it's cheaper to put them on unemployment if they apply for it. I mean, businesses. The difference between a recession and now is that now businesses are are stopping services completely. Isn't that the difference between
Well, part of
now
the
and?
program, part of the program is that, and this is what worked in Germany during that 2008 recession, that they offered companies. I assume it would have been grants to keep employees on their payroll, and I know that's at least part of this new law, that they're offering companies, instead of grants, they're offering them loans, and the loans are forgiven if they keep people on their payrolls for, I think it's a couple of months or something like that.
Mm-hmm.
And I know they're trying to work through the existing banking system, which sounds like a good idea because bankers are set up to do this kind of thing, but I'm afraid that it's going to require a leap of faith for businesses to say, yeah, I'm going to keep these employees on the payroll. I'm going to, even if I'm a healthy business, I'm going to spend the cash that I have in hopes that I can get this loan, and that I'll satisfy the conditions so it's forgiven.